today's plan. We're going to very quickly go over some introductions. Then we're going to dive into an overview of contract bonds, what type of bonds make up that category. Then we will look at the underwriting process and what is involved. And then we'll briefly take a look at the different contract programs that Bond Exchange makes available. After all of that, we are going to run through an actual application so you can see that live and in real time. If you do have any questions at all throughout this entire presentation, please feel free to put it in the Q&A and we will answer all of those at the end. All right. So very excited to have first-time visitor with us today. Charles, if you can introduce yourself and your role here at Bond Exchange.
Yeah, thanks, Taylor. So I want to thank everybody for showing up. My name is Charles Seinsheimer, and I'm the head of the contract department here at Bond Exchange. I handle all of the development and execution for all of our underwriting programs for bid, payment, and performance bonds, and I work with agents to provide contract bonds for their needs.
Yeah, so we definitely keep him very busy. So we're happy to steal him for just a little bit of time, give you some basic information, and then also make him available to answer any questions that you have. For those of you who I have not yet met, my name is Taylor Mullen, and I work in the business development side here at Bond Exchange, wearing several different hats. But one of the things that I do is talk to all of the new agents when they are getting enrolled with us, and it's my job to make them familiar and comfortable with how to utilize our tools. And I hear often that contract bonds can seem a little bit overwhelming. So we wanted to put together a presentation to just kind of provide that background information, make you guys feel a little bit more confident. So we're going to now briefly talk about contract bonds. Who the heck needs them? What are they? And how are they different from other bonds? So we're going to kick this off to Charles to educate us a bit.
Awesome. Yeah. So who needs them? All trades, types of contractors, basically contractors or service companies that are bidding on or have been awarded a project that requires bonding. These projects are most often required for federally funded projects to protect the taxpayer dollars. And basically the basis of this legislation came in the 1935 with the Miller Act, and that now requires bonds on all federal contracts of $100,000 or more. And then it was, of course, adopted by all 50 states, and they require bonds for contracts as little as $25,000 bonds. In some cases, these bonds are also required for larger private projects for the general contractor or even subcontractors that are performing the work. So contract bonds, they serve as a financial protection for the owner in the event of a contractor default. The contractor bond category includes two types of bonds. So there's bid bonds and payment performance bonds, and they differ just a little bit. When a contractor is bidding on a project, they will often be required to provide some kind of bid security, and that can be anywhere between 5, 10, or 20% of their total bid amount. In some cases, it's more or less. It just kind of depends on the obligee themselves. So this could be in the form of a cashier's check or a bid bond, and in this case, a bid bond. The bond essentially serves as a promise that the contractor will execute the contract and provide the payment performance bonds to the obligee if they're awarded the project. If they do not, the obligee can file a claim on the bid bond for the difference in the contractor's bid and the next lowest bid amount. So that's usually not to exceed the bid amount. Think of a bid bond as a way to ensure to the project owner that the contractor's bid, they won't withdraw their bid after the award or choose not to follow through with the project. So this also ensures that the pricing doesn't change because usually pricing is priced out during that bid phase. So claims on bid bonds are rare, and they would generally be the result of a contractor that didn't understand or misread the bid documents and underbid the project. Because these bonds have very little risk, there is not a premium charge for them. So if the bidding contractor is found to be the lowest responsible bidder and is awarded the contract, they will need to provide the project owner and the GC, or the GC, sorry, with a payment and performance bond prior to the start of the work. So in some cases, when a project is not bid, but rather negotiated, project owner may start with a payment and performance bond request. While payment bonds and performance bonds, the performance bond basically guarantees the contractor performs the work in compliance with the contract terms and conditions, and the payment bond guarantees the payment of suppliers or subcontractors. So there's a little bit of a difference between those two obligations, and they cover different things, but they're almost always provided in a package. So these bonds will stay in force for the duration of the project and would be released or closed once the contractor has completed the project and the obligee has accepted the work. So claims on these bonds are generally a result of a contractor having financial or cash flow difficulties, or if they don't have the proper skill or experience to complete the project. So we've definitely seen our fair share of that, and that's why we kind of do this kind of underwriting. So our agents generally have more experience with commercial bonds, and that would be needed for professional licenses or permits. These bonds guarantee a compliance or licensure regulation of statutes and are renewed annually. In this case, bid payment and performance bonds are issued for a specific project and would only stay in force for the life of the project.
Okay. So I think I'm starting to understand this. It seems fairly straightforward. Bid bond when you're bidding on a project, payment bond, make sure everybody gets paid, performance bond, make sure the work gets performed. Does that
Exactly.
sound like I have a handle on it? Okay. All right. We are learning, guys. So now that we have an understanding of the different types of contract bonds, we are now going to dive into what is necessary for underwriting. I know this is where a lot of our agents are hoping to get more information about what their customers need to provide. So if you can walk us through the different categories of underwriting here, Charles.
Yeah. So let's get into underwriting. Contract bonds are underwritten and they're reviewing the contractor's experience, credit report, and project details. So that's like terms and conditions of a contract, for example. You will see specific examples of this in a couple of moments. We're going to go through the online application process for larger projects that exceed 500,000. We would also ask for some additional information, such as business financials, personal financials, and details about previously largest completed projects. Ultimately, our goal is to make sure the contractor is financially capable and has the necessary experience and skill to complete the project that we are looking to bond.
It seems fairly reasonable. Looks like they can do the work. All right. So I know that we have broken this down into a couple of different categories here at Bond Exchange. So if you can just kind of walk the agents through what the differences are here.
Yeah, sure. So at Bond Exchange, we have three separate programs. The first two are pretty similar, the Quick and the Small. The Express program, the Quick Express program, is designed for projects that are 500K and under and are expected to be completed within 1 year. Within the program, we look at the personal credit of the owners uh, and the project terms to determine approval. We would only run a soft credit check, so that wouldn't affect their credit. And it's similar to what would be run for like an auto insurance quote, which you might be familiar with. So our small contractors program, that goes up to 1 million, and we expect the project to be completed within about 18 months. So in addition to the information needed for our express program, we would ask for details on previous project experience, current business cash balances, and cost to complete values on all existing work in progress. So it's pretty similar, but there's a little more underwriting information needed. So these are streamlined programs that kind of allow us to quote and approve bonds quickly. And pricing for these programs can range anywhere between 2 to 3% of the contract amount. So our medium to large size program is it's a little more intensive. There's a little bit more underwriting involved. Um, Basically, these are projects that would exceed 1 million, and at these limits, we would need a full submission and will require more manual underwriting. So basically, in some cases, we require audited financials. If, for example, it's like over 2.5 million, in some cases, we just require 3 years of financials, but we have a more extensive application and it's a little bit more manual back and forth. So we also work with the U.S. Small Business Administration to help small businesses obtain bonding when the contractor wouldn't normally qualify within the standard marketplace. So that could be due to personal credit or insufficient working capital, stress financials, something like that, or even previous like lack of experience with projects of that size. So this program can be useful for projects up to $6.5 million in size, and we use this program pretty often. So we can definitely help contractors that aren't necessarily able to make it within a standard program.
Got it. I did not realize the SBA program went up to such a high amount, so that is good to know. So, all right, we've definitely got a good understanding of some of the basic information regarding contract bonds. So what I'm going to do now I'm going to stop sharing and we're actually going to have Charles walk us through an application in real time. So let me just make him the host there. All right, feel free to share your screen. And yeah, I know that some people learn better visually, audibly, so we like to provide a couple of different ways of getting this information over to you guys. So hopefully this walkthrough helps a little bit.
Yeah, and just for some people in the Q&A, we're going to provide this webinar. So you should be able to go back and get that information.
Absolutely.
Let's see. Okay, so let's start a quote. We'll start a quote for a bid bond today. Again, just as a refresh, that's for contractors bidding on a project, and that's to ensure that they aren't erroneously bidding when they're bidding on, the amount that they think that they can bid on, and they'll take the project if they win the bid. So the first question is going to ask you about the current state that you reside in. So is the bond actually needed in the state we are? We're just going to say yes. Of course, you can select no and find bid bond in any of the 50 states. So yes. So do we know the name of the bond needed? In this case, yes, we know it's a bid bond. So let's go ahead and click yes. Here, our search feature is pretty handy. I'll just show you a few things. You can search bid bond. I think it's easiest to search payment to find the contract payment performance bond, or even if you're, doing other bonds like a motor vehicle dealer, you know, just some examples. So as you'll see with this bid bond, it says it's required by a generic obligee. That's actually correct. We'll have a chance in the middle of the application to put in the correct obligee. So we'll just
Okay.
use, like, let's say the city of Charlotte, for example. We'll have an option in the middle of the application. This is what we want to click. Okay, so is this the bond we're looking for? Yes, this is us. And our feature allows our customers to complete the application and receive a quote on our website. Do you want to send the app to the customer? So you can, at any point in this application, send the app to the customer. Your questions will save, and they'll basically pick up where you left off. Regardless, in this scenario, of course, we're going to complete it ourselves. So we're going to click no. And generally, just kind of when people like to send this to the client, they like to send it to the client when it starts asking about project specific information, for example, because a lot of the time the agent doesn't really know about that side of the business. So we're not going to send it. Okay, so what is your contractor's business name? We're just going to come up with a name. Contracting. Okay, and we're going to say they're an LLC. This is so we can collect correct indemnity. So, all these questions are important, and of course, we want the most correct information possible. We're going to say this customer has been in business for 3 years. And we'll put our phone number in there.
That looked familiar.
Yeah. And an email. So okay. So what's your customer's business address? Our search feature is pretty helpful here. It'll actually autofill. So let's just say it's somewhere in Charlotte. Most likely that's what's going to pull up for me. Yeah. So this will be their address for today. So this is important because we'll want to know not only the business address, but where they want the bond actually mailed to. We want to make sure this is correct so we can actually get the physical bond to the customer. So in this case, we're going to say it can be mailed at the same address. So we're going to start looking at questions about the business owner. Just so you know, we're going to be using fake information here, so it's not a real person, it's not a real social security number. You'll notice that actually, interestingly, the social security number isn't even a valid social security number. If you know how socials work, I find that interesting. Maker. So this is our business owner, and is social. Oh, make sure that's correct. Okay. And so in this case, Gregory is a U.S. citizen, but just so you know, we can provide contract bonds to green card holders. We have to use the SBA guarantee program, but it's definitely something that we can handle as long as they still qualify within our limits. But we do have to have the actual a picture of the actual card, the green card holder card, and we'll ask you for that, of course. So is Gregory's address the same as the business address? We're going to say he works from home. Make it easy. What percentage of the business does Gregory own? Again, we want to make sure this information is correct because if there's multiple owners, we definitely want them to indemnify as well. In this case, we're going to say that he owns 100% of his business. So is Gregory married? Gregory is not married in this case, but again, we would want spousal information because spouses do have to indemnify on all contract payment performance bonds. Are there any other owners with 10% or more ownership in the business? Just a clarifying question. Some people get a little confused and they're just trying to get through the application. This is just a check to make sure that the previous answers were correct. So we're going to say no because there aren't any other owners. But basically, just so you know, 10% or more, we need the indemnity information. 10% or I guess 9% or under, we wouldn't. So what trade does your contractor typically perform? We're going to say he's a drywall contractor. As you can see, drywall isn't necessarily on this list, but there's more to the list. So we can look at other trades. Those are just our most popular trades. So our contractor is a drywall contractor. And then there's even a further other. The further other just kind of lets you type in their trade. Let's click drywall. Okay, and we're basically just confirming he's a drywall contractor. Has this contractor or any business owners ever had any of the following occur? So surety claims, bankruptcies, I mean, you guys are probably very familiar with this. It's a very common red flag list of questions. He is not. So does the contractor need a bond now, or are they just looking for pre-qualification? So what this question actually is talking about is contractors can pre-apply and see what kind of limits they can get from our sureties. So for example, they can apply for the $500,000 limit or the $1 million limit or even over that. So that helps a contractor know what they can and can't bid on. So they're not, bidding on something they shouldn't be or is way outside of what a surety would be willing to offer them. So in this case, we do have a specific bond need. It's a bid bond need. So we're not going to click pre-qual only, but this would actually in the application and get your contractor a pre-qualification letter. And that would contain a rate, that would contain limits. Bond. Okay. So is the contractor bidding on a job or have they already been awarded the contract? So in this case, they're bidding. We're looking for a bid bond. Okay, so let's get some information on the job. Will they be performing drywall work? We're going to say yes. Let's say this is a drywall contract for the Town Hall Charlotte. So are they the prime contractor? So this is important because it's basically deciphering whether or not they are directly working with the owner of the project or whether or not a prime contractor has hired them to do work. Because again, subcontractors sometimes do need bonds that go to the prime contractor. So it's whoever the contract is with. So if your subcontractor has a contract with a prime contractor, that's who the bond is written to, that prime contractor. If your contractor has a contract with the city or town or whatever it may be, or even like a commercial builder or something like that, they could be the prime contractor. So in this case, they're working directly with the city. Okay, so what is the name of the project owner? And this is usually a city, county, state, or federal government agency. So we just kind of already went over that.
So if it was the general contractor, they would just put that contractor's name here.
no.
Correct.
So that would be if they're the subcontractor. The subcontractor
Okay,
would
so
put the
it'll ask a
contractor's
different
name here.
question.
Exactly.
Don't worry, agents. I asked the questions you guys are thinking.
Okay, so what's the city of Charlotte's address? Again, we're gonna have to make one up because I don't know what the city of Charlotte's address is.
We haven't
But
actually
that's
gotten
okay.
this contract, unfortunately.
Right, this isn't an actual contract, but of course, this is almost always contained in the contract. It's usually on the first page, but regardless, I mean, it's something that we can figure out. So definitely get the right information here. Is the city of Charlotte a federal government agency? The reason why this question is important, and it might seem kind of a silly question to ask, is because federal government agencies actually require different bond forms. They also require different sureties to write the bonds. It's definitely something we can do, and we do it every day. But the importance of this question is so we don't send you the wrong thing. So they're not. They are a local agency. What is the project name and number? We'll call it City Hall Drywall number 1234. Again, this is something that's usually found on the front of the contract. Okay, so where is the project actually taking place? So this is the location of City Hall, for example. So it's on Bronson Drive today. Okay, so getting into when is the project expected to start? This is a question we often get back that we get it back incorrectly a lot because what people perceive it as is like how quickly can I get my bond? It doesn't actually help you get your bond any quicker if it's earlier or later. We're actually really quick at bond exchange. I'll respond to your email usually within the hour when it comes to the contract department. Um, of course, on a working day. Um, so let's just say usually a project's about a month out if we're still bidding. Let's just call it a month out, 25th of February. And this is the actual start date, not necessarily the bid date. It's an estimate usually. So how long will the project take to complete? We're going to say, it's just a drywall contract, maybe 4 to 6 months. Who knows? But that's another thing that the contractor is going to discuss with the owner of the project and know that information. So a maintenance period is basically when a contractor is finished with a job, there's usually a year or so period where they have to come back and correct any work that was done incorrectly or has started to fail. It's almost always about a year or less. I've seen 2 years, I've seen more, but for now we're just going to go with a year. So what is the daily penalty? These are usually called liquidated damages in the contract. Basically, this is when work hasn't been completed in time. So maybe they've gone over time, let's say by 10 days, they might have to pay $1,000 a day. Generally, it scales up the larger the actual contract is. So larger contracts can see larger liquidated damages. And we're just,
Nice.
usually these small projects, I'd expect 250 to 750 or something like that.
Okay.
Okay, so was an engineer's estimate provided in the bid specifications or requests for bids? We're going to say they did. This isn't always the case. It's fine if it wasn't, but in this case, the engineer said that this project was going to cost around $250,000, let's say, and the contractor thinks it's going to bid at about 260,000, let's say. So, they do their own estimates and they decide this is what they think the project's actually going to be worth. So that's what they're going to bid at. And if the other bidders, think the same thing, it might be different than what the original estimate from the engineer was. But, the price is found out by bidding. So we'll just
Okay.
say the bid ended at 260,000. Okay. So what percentage of Hammer and Nails contracting work on this project will be subcontracted out to other contractors? They're a simple drywall company, let's say, and all the work that needs to be done is drywall. But like for example, maybe they're a general contractor and they need an electrician to do very
Mhm.
specific work on the job. They might further subcontract out work to a further subcontractor. So that would be the reason for 26, 51, something like that. In this case, we're going to say the drywall contractor doesn't subcontract out any work. Okay, so what percentage of the bid bond needs to be bonded? So a 5, 10, or 20% bid. Again, this is so we just get the right thing to you. It really doesn't matter, but the city needs a certain amount, so we want to make sure the bid is correct when we issue the bid bond. So in this case, we're going to say it's for 10%. So did they provide a bond form? Often a municipality will have their own bond forms they want it written on. Sometimes the language of the actual bond form is something that maybe a city lawyer wants in a specific way. And in that case, we're happy
Mhm.
to accommodate. So definitely click yes if there is a bond form that needs to be used. It's again something that we just want to make sure you get the right thing the first time. So we're going to say no, though, because we do have, of course, our own standard issue bond forms if the city of Charlotte did not have a bond form to use. Okay, so when are bids due? Again, this is another question that people, like to say is tomorrow, but often,
Immediately.
but and sometimes it is. Of course, contractors, I hear it all the time. they call up their agent and they say, "Hey, I've got a bid tomorrow. Is that something we can do?" And that does make it tough, but it's definitely something we execute on every day. In this case, I would generally say it's usually about a week out. But of course, it's a made up project. Okay, so they're going to bid on the 31st.
System's going to think about their request now.
Okay, great. So we got our bid bond approved, and we don't charge for bid bonds, so nothing is due right now. If they're awarded the contract based on the estimate of 260,000, the P&P bonds will cost 7,800. So as you can see, they can just continue with the bid bond. They can get the bid bond immediately. We can upload it from our site. One thing to note is often bid bonds don't need to be manually sent out. Sometimes, or most of the time, a municipality will accept just a electronic copy or just a printed copy without the stamp seal. We'll have a digital seal on it anyway, but it's just kind of the nature of these contracts happen so quickly, and it's hard to get a bid bond to a contractor in time, especially when they only give you a couple days. So we're going to continue with this. We already got your quote if they do actually win the bid. If they don't win the bid, then nothing is owed. So you're ready to issue the bond. No payment is due. Let's go ahead and issue that bond. Let's see. So when we issue the bond, we'll actually get a bond form to look at, and I can kind of just give a quick overview. Of course, these are. Oh, and how was your experience? We had a wonderful experience, right?
5 stars.
I'm not gonna rate us. That would be dishonest. So we're gonna download the bond form just to kind of take a look at it real quick, just so you guys see what a bid bond looks like real quick. It'll come up on my screen. Taylor, can you guys see that?
We can
Great.
see it.
Okay. So this is generally what a bid bond looks like. As you can see, it's 10% of the original estimated amount of 260,000. This is very typical. A lot of people ask me, "Oh, I said the bid was for $260,000. How am I going to bid with this?" This is correct. I promise. This is how it's normally done. In some cases, a municipality might say, "Hey, can you put like 10% here instead of 26?" That's something we can handle.
Okay.
We deal with changes all the time to bond forms, and we're going to do what it takes to get the bond corrected. Okay, so these are the bid results. We want you to return these to us when the bid is actually completed. If you win or lose, we still want them because then we know whether or not to close out the file or open a P&P file. And of course, we can get started on the P&P bond, and you're just going to put general bidding information. For public projects, this information is almost always public information. So it shouldn't be too hard to get this information. And of course, a POA. But yeah, and that's pretty much it for applying for a bid bond.
That's bid bonds. All right. That seems simple enough. I'm not an expert yet, so let's see what questions we have. Give me 1 second. I am going to take the reins back here. I'm gonna go back to running the show, Charles. Sorry. All right. Okay, so we just went through a ton of information about contract bonds, about how to apply for them. So let's take a look at what questions we have. I do want to just make a quick note. All of our contact information is here. I will be sending out a recording, hopefully by the end of today. Worst case scenario, I'll get to you guys tomorrow. That is recording of this entire webinar. So you will have it. It'll also be able to be on demand, and it'll be on our YouTube page. So we will make it available to you guys, but if you do have any questions, please feel free to contact us after this. Okay, let's see here. So I have quite a few questions about the recording, so we can answer those. Charles, I do have a question here, and I feel like I've gotten this question before.
Okay.
How about bonds related to liability with gift cards? I have a franchisor that requires each franchisee to have a bond for 25 to cover. Well, I don't think that's a contract bond.
Yeah, I think
That's
that's probably a commercial bond.
okay.
I do have a general knowledge of surety, but I can't say I'm an expert on something like that. It could be something that is required by a state or local municipality. It could be something like a licensing bond. I'm not exactly sure because I guess
Yeah,
I don't know who the obligee is, but I would bet that someone could be like a local agency. Um,
it's interesting the
if I
franchiser.
had to
Yeah, I would
if I had to
go
guess,
ahead.
it's probably something our commercial team can handle, just because I've
Mhm.
seen bonds like this before, especially for franchisors or franchisees. I've definitely seen that request before. And if you have requests like that, you can contact service at
On this
bondexchange.com
number, yeah.
for commercial, or yeah, call the number, of course, 800-438-1162, and a commercial underwriter will pick up the phone. When you call that number, you can be if you have a contract question, you can always be transferred to me or one of my um, contract minions for further help with contract bonds. Just say, I got a question about a contract bond, and our commercial
Absolutely.
underwriters will be happy to transfer you over to us.
Here's one you should definitely know about. For SBA programs,
Mhm.
does the agent need to be enrolled with SBA?
Yeah, so I can answer that question. No, so we are actually technically the agent for the SBA bonds. So we kind of cover that. Now, that's not to say that you won't get commission. You still will definitely get commission. It's actually the same commission that you would get for a standard submission. So that's actually a nice perk. It's kind of like a non-standard um, type of program, but you get standard commission structure. And that's another reason people love bond exchange. Um,
Mhm.
so for the SBA, that's something we would handle almost exclusively on our end. We would communicate with the SBA, get approval, and then contact you when we're kind of ready to process an issue.
Fantastic. This one I feel like seems similar. And sorry, I'm hopping around. So if I'm skipping your question, I'll try to get to it. Uh, if the customer is new in business, does it affect their eligibility?
Yeah, so it definitely can. We have um, I want to say we definitely have programs that can accept new contractors, and that is inclusive of those kind of quick programs. We can definitely underwrite within the standard market for a brand new business. Considering they are a new business, it may be harder to get higher limits, and we may restrict them to a certain limit. Again, that always depends on the contract, depends on the contractor, depends on, can depend on a million different things. But you're definitely right though. That is definitely a part of underwriting is how long they've been in business.
Absolutely.
And I'd actually
Um,
like to answer a question that I saw in the Q&A.
yeah.
So I saw a question about residential contract bonds. Those are very non-standard submissions. They're pretty much considered
Mm,
high risk because best way to put it is residential contractor clients can be very picky. And often when they're requiring a bond, it's because they might want to claim it. It is a very adverse selection way of bonding, but that's not to say we can't do it. We do actually have markets for residential clients and bonds, except that they are a little bit more restrictive and they can sometimes require collateral. So it's definitely a high risk market, and not everybody can qualify for something like that.
absolutely. That makes sense. I have a question here about putting this application on their website. So I can tackle that one. Yes, we do have the
Awesome.
ability to put the online bond application directly onto your website. It is a tool called Surety Pro. It can be completely embedded onto your website so that they're doing the application and never leaving. It can also be given to you in a link. So Martin, I will reach out to you later today with a quick, just like a video on that to get some more information, and then we can definitely help you install that. Okay. We have quite a few questions, so I'm not sure we're gonna get to all of them, but we're going to try. Here's one. Charles, there are some new insurance employees on the call. Can you please explain what indemnify means?
Yeah,
And
sure.
we're talking about
So,
spouse, other owners, all of that.
of course,
Doing
yeah,
good
that's a good
work.
point. I should have explained that better. So, indemnity kind of refers to um, uh, risk and how it's allocated. So, despite the fact that the surety is taking on a risk to finish a contract if the contractor cannot. We still require the contractor to indemnify. This is the case on pretty much every single surety bond for any business, for any trade, for contract bonds, commercial bonds, whatever it may be. Indemnity is collected. Basically, what it means is the contractor is ultimately responsible for paying back the surety in the event of a claim. So the reason why a surety bond is even done in the first place is because it's to protect the obligee. So we're going to say it's the city of Charlotte might be an obligee. The reason they're requiring it is they're worried maybe a contractor might skip out on their obligation after they've already signed a contract.
Mhm.
Maybe they don't want a lien to be filed because a subcontractor isn't paid or something like that. So what it protects against is pretty much catastrophic problems where project goes wrong, somebody goes bankrupt. We've seen it before. Um, but the hard truth of the matter is they are ultimately liable for the claim, and the surety will kind of get into a claims process to require the surety to be paid back.
I feel like I just learned a lot of information about what an indemnity is there, so I appreciate it. This is a question I have not seen yet, so I would love to know the answer. What if the contractor does not have one individual owner or the owner is an entity?
Okay, yeah. I mean, we've definitely dealt with entity owners before. Basically, what we most often see is like, for example, a trust might be an owner,
Mm-hmm.
or even another business in some cases. We definitely want to get to kind of the root of the indemnity. So we do require personal indemnity. I've seen it waived before on very, very large bonds. So I don't want to necessarily say that's always true. Um, that would be, for example, let's say, a business is worth $100 million, and the business indemnifies for the bond. It may be something where a surety is willing to waive that sort of thing, but almost exclusively what we're talking about here is small contractors. It's probably what our agents see the most, and it's definitely most of the applications we get are for small contractors. In that case, we're looking at let's say a trust owns a business. We'll want the trustees personal guarantee is, what an indemnity basically is a guarantee. We'll also indemnify the trust, and then we'll indemnify the business.
Just scrolling through, a lot of these questions are about what type of license you need to sell bonds and what states you could do that in. So just to give you some general information here, um, we are licensed in all 50 states. So you can provide bonds in all 50 states. And all
Mhm.
you need is a PNC license to become a bond exchange agent. I will
Yep.
verify that though when we
And
have
when
an
it when it
agent
comes to
enroll.
Yeah, true. When it comes to, by the way, contracts specifically, who can sell bonds, where they can sell bonds, we are nationwide for contract bonds. There is a couple of, I guess, tough areas. For example, the five boroughs of New York City specifically is very tough. That's tough for a lot of brokers. It has to do with regulation in the city and kind of how they operate. That's not to say we can't. We actually do have a market that is starting to open up for that sort of thing. But again, it's tough and it's tough for everybody. When it comes to Alaska or Hawaii, you got to think about build costs. Those are totally different. Materials costs are totally different. Labor costs are totally different. That's not to say, again, not to say we can't. It's definitely something we're going to take a look at. Um, there's a little bit more underwriting involved. I just want to make everybody aware of that. But as it pertains to pretty much everywhere else in the country, which is where a vast majority of our bonds come from, we're you know it's very easy to just kind of apply for example, a small bond like this and just get it done quick.
Okay. Again, couple couple of questions here just about surety. So in order to become an agent, you would just go to bondexchange.com. There's a button at the very top that says gain access if you are not already an agent here. A lot of questions about commissions. Just making
Hmm.
sure I'm getting all of those logged on here. Charles,
Yeah,
can you walk us through commission really quickly while I look at
I
other
sure can.
questions?
Yeah,
Thank
so
you.
standard commission on contract bonds is 15%. So generally what you're looking at is just with some quick math, if we're doing like a $500,000 bond, Um, the bond premium is usually 3% of that. So your 15% commission would be on that 3%. So, you can math that one out, but that's kind of generally what we offer. That would be offered for all of our standard programs, and that would also be offered for the SBA program. If we're dealing with kind of like a deep non-standard submission, in some cases, we do go down to 10%, but again, very rare. And again, that's not even like a general non-standard submission. That's like a deep non-standard submission.
Okay. Um, we do not have any production requirements. I know that is a question here. I'm
Mhm.
just getting to the easy ones first. We don't have any production requirements to being an agent with us. Um, is the term surety bond the general term used for these types of bonds? So there's a lot of confusion sometimes about how we talk about these types of bonds. So
Mhm.
contract bonds are sort of the name given for the bid payment and performance bonds. Surety will tend to be the overarching term. We also will have things that fall under probate bonds.
Mhm.
So there's a couple of different ways to categorize these,
Yeah.
but surety bonds is the general bond. Contract is actually what all of these types of bonds
Yeah.
would technically fall under if you're looking at kind of keywords.
And I can speak a little more on that.
Mhm.
Performance bond specifically is a term that everybody likes to use. It's honestly not necessarily a contract payment and performance bond. In a lot of cases, like for example, there's a lottery bond in like Ohio or something that's called a performance bond. It's just kind of something that obligees will call it. If it's for specifically a contract, that's how you know it's a contract payment performance bond.
Okay. Let's see. How do you deal with someone who already has a bond but needs an additional bond for another contract?
Sure. Yeah. So, generally speaking, we already have them in our system, and that makes it kind of easier to underwrite. Um, we do provide something called aggregate limits. If, for example, you're going to pre-qualify, if you're planning on getting, like more than one bond, it is a good idea to pre-qualify because then you kind of know, okay, so I've got a single limit of this and then an aggregate limit of this. What aggregate basically means is if you add up all of your bond obligations together. So let's say we have a $300,000 project and a $400,000 project, and they're both something that bond exchange bonds. Excuse me. That would be $700,000 in total aggregate, right? So we would consider aggregate as a underwriting tool, but it kind of allows people to bond more than just that small $500,000 limit if they have multiple projects.
I think the last question we're going to have time for here, and if I missed your question, I will definitely be going through the Q&A questionnaire later and reaching out to people for any individual answers that I missed or if they were just a direct question to me. But the last question is just about bid bond dates and bid dates. Just I think a couple of people were confused.
Sure.
So when they're putting in the date the application is, how is that different from the bid due date?
Sure. So, kind of two terms we would use is start date and bid date. So the bid date is specifically the date on the front of the it could be called an RFP, invitation to bid, request for proposal. It's that packet that they get when they're bidding. It basically says when they need their bid in by. So of course, why that's important is because we want to make sure one, they get the bid in time. Two, we're not providing a bond on something that's long since passed. And sometimes we will ask for those bid specifications or requests for proposal just to make sure. Um,
Mhm.
but generally speaking, you can get, if everything qualifies, you can get a bid bond instantly, and we won't need to ask for more information. As you can see, we were just able to complete a quote. Um, and the start date is specifically when they think the actual work will start. So that includes, mobilizing, getting materials together, getting on site, that kind of thing. It's really up to the obligee when the project actually starts. But sometimes there's delays. Sometimes it's definitely an estimate.
Absolutely. I'm sure every contractor can tell us that there's always a
Oh
delay
yeah,
on
of
a project. Okay. Well, thank you so much for your time, Charles. I know we
course.
have you with tons of questions. We appreciate you making yourself available. Again, just a reminder, this is recorded. I will be emailing it out to everyone if you did miss a couple of minutes in the beginning or just miss some of the answers. And then again, all of these videos are posted on our YouTube page. So definitely be sure to check it out there. Otherwise, just want to thank you again for your time, and we hope to see you guys on the next webinar. Thank you so much. Have a great rest of your day.
Thanks, everybody.